Does it even matter if you pick a mortgage broker or go directly to the bank for your home loan? Um, yeah.
Yeah!
What's up, Squares? Harold Perkins here, and I'm just going to come right out and say it. If you're using a bank for your home loan, you are doing it wrong. Yeah, that's right. The gap in quality between a mortgage broker and a bank loan officer is so significant that I truly believe that the only reason anyone would use the bank is because they didn't know about the differences.
What's the difference?
What's the difference?
So let's talk about the differences, and you can decide for yourself on your next home loan. Now, perhaps my perspective is skewed because I've only ever been a mortgage broker, and that's going on 25 years now. And it's a fact that the majority of mortgage loans originated 25 years ago were originated by a bank loan officer and not a broker. But that changed, and here's why. One of the primary reasons is that most mortgage broker originators work for 100% commission. If we don't close your loan, we don't get a paycheck. Then stack on that, most mortgage broker originators do not get any leads or loans provided to them from their company. Or if they do, it's at a reduced commission.
These are the Glengarry leads. And to you, they're gold. And you don't get them.
So most mortgage broker originators are as close as you can be to being self-employed without actually being self-employed. So why does all of that even matter? Well, think about this. If the mortgage broker knows that they won't get paid unless your loan closes, then they're going to do everything in their power to make sure that your loan closes and that you're happy about it. So stack on that the high level of service you're going to receive because they need you to use them again in the future, and refer your friends and family for their mortgages too. Remember that they're probably not getting leads from their company, so they also need to figure out where their next paycheck is going to come from. Happy people refer their friends and family. Unhappy people write bad Yelp reviews.
Oh, it's laughing now!
So I'm not saying that the bank loan officer doesn't care about doing a good job for you or getting the next referral from you, but their consequences are much less severe if they don't. Regardless of how your loan goes, they still receive their hourly paycheck, and sure, they might receive a small commission per loan closing, but they certainly don't rely on that as 100% of their income. And the thing about a bank loan officer is that they have a steady stream of potential customers because those customers are already customers of the bank. For a depository bank, the mortgage services are just a value add for their customers, not their primary focus of their business. So from the bank loan officer's perspective, if you have a bad experience with that bank loan officer, whatever. I'll just wait for the next loan to come in. The broker's motivation is to advocate for you. The bank loan officer's motivation is to get through the day without getting hassled by their manager, and maybe getting the corner piece of Kathy's birthday cake.
What's wrong with it?
I want a corner piece.
So that's a difference in motivations between a mortgage broker and a bank loan officer. But what are the differences between what they do every day?
What's the difference?
What's the difference?
The main difference in getting a mortgage from a broker or a bank is that the mortgage broker acts as an intermediary between you and multiple lenders, while a bank is a direct lender that provides mortgage loans to its customers. Yeah, that's right. A broker works with several, if not dozens, of different lenders all at the same time. A mortgage broker can provide a wider range of mortgage product from multiple lenders, while the bank can only offer its own mortgage products. This matters more than you would think. There are differences in underwriting policies and guidelines that vary greatly from bank to bank.
What's the difference?
What's the difference?
For example, one bank might require a minimum credit score of 640 for a particular loan program, while the other bank only requires a 620. Or one bank might have a maximum debt to income ratio that they allow, where the next bank might be willing to make exceptions for that higher debt ratio. And these differences often happen on the exact same loan program.
What's the difference?
What's the difference?
FHA loans at one bank are different than FHA loans at another. Same with VA and USDA and conventional. This is what we call overlays. Overlays are the specific bank's own guidelines that they stack on top of the general guidelines that come from HUD or VA or Fannie or Freddie. Think of it like your own house rules for a game of Uno. Like at my house, you cannot stack draw fours on each other. But if you go to Teresa's house, which allows stacking, then the 8-year-old kid ends up going to bed crying because he had to draw 16 cards because everybody ganged up on him. Overlays. But the mortgage broker knows all of them. All of the overlays for all of the banks that they work with. And you want that. You want someone that's able to review your specific scenario and know exactly which bank is happy to approve that scenario, and which ones to avoid because the broker knows that you will not fit into their overlays. The bank loan officer only has their own bank's guidelines. If you do not fit within it,
Loan denied.
your loan is denied. This is personalized service, which a broker can offer because they work with you to find the best lender and the best loan options for your unique situation. So all of this sounds wonderful. So it must be more expensive, right?
They said market price. What market are you shopping at?
Nope. And for so many reasons. Let's start with the simplest reasons first. The mortgage broker is literally shopping your mortgage for you. Okay, so we already know that brokers can have dozens of different lenders that they work with, and your loan scenario might fit within the guidelines and overlays for several of them. Well, if we know that your loan is going to be approved by several different lenders, then it becomes very simple for the broker to send your loan to the lender that has the lowest rate and lowest cost for your scenario on that day. We even have software that aggregates all of our lenders' rates and fees in real time and sorts them from lowest to highest. The bank only has their own rates and fees, and they are higher.
What's the difference?
What's the difference?
It's basically the difference between retail, which is the bank, and wholesale, which is the broker. When you get a loan from a bank, that bank has a lot of expenses that they need to pay out of the money that they make from your loan. Remember when we talked about the bank loan officer having a salary to pay whether or not they close your loan? You got to pay for that. And what about their manager and their manager's manager and the underwriters, processors, closers, and all the other support staff that is involved in the closing of a loan? They all have salaries, and the levels of bureaucracy at some of these banks is astonishing. And you got to pay for all that. And what about this? If you have a Super Bowl commercial and product placement in the Avengers movie, then you have a higher rate and fees. Okay, so this is where it all comes together. Remember how we talked about the broker is 100% commission and heavily relies on referrals and repeat clients? Well, they don't rely on owning a basketball team or Super Bowl commercials or product placement in blockbuster movies.
I like mortgage brokers without the moral code.
So because of that, the broker is going to be completely hands-on during your entire loan process to ensure a positive experience for you. That hands-on attitude removes all of the unnecessary people that add to the cost of your loan through higher interest rate.
I have 8 different bosses right now.
I beg your pardon?
8 bosses. 8? 8, Bob.
Okay, so if you go to a retail bank, they're going to charge you their interest rate. That's fine. But did you know that same bank will give a mortgage broker a lower rate to give to you for exactly the same loan that they were going to give you at a higher interest rate? And that bank will pay the broker on top of it. Yeah, that's right. A bank makes more money on a mortgage by paying a broker to originate the loan for them at a lower interest rate than they would make if they originated the loans themselves. And that's why 70% of all the mortgages that were originated in the US last year were originated by mortgage brokers.
That's how America does it. And it's worked out pretty well so far.
And that's why it matters if you're picking a mortgage broker for your home loan. If you agree that brokers are better, then please hit the like button or ask me questions in the comments below or message me. I'll answer your question like an underwriter, either approved or denied. Later, nerds.
Yeah!